Hey there, future Wall Street wizards. Ever feel like the world of finance is speaking a different language? Like they're throwing around words like equity and portfolio, and you're just nodding along, hoping no one notices you think a dividend is something you get from your dentist. Well, fear not, my financially perplexed friend. Because today, we're going to demystify one of the most fundamental concepts in investing: stocks. Think of me as your friendly neighborhood stocks guru, here to guide you through the wild, wonderful, and occasionally weird world of owning a tiny piece of big companies. So, what exactly is a stock? Imagine a giant, super successful company, like Awesome Gadgets Incorporated, the makers of that self-folding laundry basket you didn't know you needed. Now, instead of just one person owning the whole shebang, they decide to break it down into a whole bunch of tiny little pieces. These pieces, those are shares or stocks. When you buy a share of stock, you're essentially buying a tiny little ownership stake in that company. Congratulations! You're now a part owner of Awesome Gadgets Incorporated. You can now casually drop at parties, "Yeah, I'm kind of a big deal. I own a piece of a laundry basket empire." Now, why would you want to own a tiny piece of a company? Well, there are a couple of main reasons. First, if the company does well, maybe their self-folding laundry baskets become the next must-have item. The value of your little piece of the company can go up. It's like your tiny investment grows along with the company. Second, some companies share their profits with their shareholders. These are called dividends. Think of it as the company saying, "Hey, thanks for being a part owner. Here's a little slice of the profit pie." It's like getting a little bonus just for owning the stock. Now, it's not all sunshine and self-folding rainbows. Just like a company can do well, it can also, well, not do so well. Maybe people decide they prefer their laundry to stay unfolded. If the company's value goes down, the value of your stock can also go down. It's like your tiny investment shrinks a little. This is where the concept of risk comes in. Investing in stocks always involves some level of risk. The potential for high returns comes with the possibility of losing money. It's not a guaranteed get-rich-quick scheme. Sorry to burst your bubble if that's what you were hoping for. Now, how do you decide which of these tiny pieces of companies to buy? Well, that's where things get a little more interesting. You can try to analyze companies, look at their financials, and try to figure out if they're likely to do well in the future. Or, you can just pick the company that makes your favorite snacks. No judgment here. There are also different sectors of the economy. You've got tech companies, healthcare companies, energy companies, and a whole bunch more. Investing in different sectors can help diversify your portfolio, which is a fancy way of saying, don't put all your eggs in one self-folding laundry basket. So, how do you actually buy these magical pieces of companies? You typically do it through a brokerage account. Think of a brokerage as a middleman that allows you to buy and sell stocks on the stock market. There are many different online brokers these days, making it easier than ever to get started. There are also different investment strategies. Some people like to buy and sell stocks frequently, trying to make a quick buck. This is often called trading. Others prefer to buy stocks and hold on to them for the long term, hoping they'll grow over time. There's no one-size-fits-all approach. It depends on your goals and how much risk you're comfortable with. Now, a quick word of caution from your friendly neighborhood stocks guru. Investing in stocks is not a guaranteed path to instant riches. It takes time, research, and a little bit of patience. Don't invest money you can't afford to lose, and always do your own homework. So, to recap, stocks are tiny pieces of ownership in a company. You buy them hoping the company does well and your investment grows, or that they pay you dividends. There's always some risk involved, and you buy and sell them through a brokerage account. Simple, right? If this video helped you understand the basics of stocks, give it a thumbs up. Subscribe for more simple explanations of complex financial topics. Thanks for watching, and happy investing!